Sound check YouTube. One, two, three, four. I can count. I'm just proving it to you. Good morning, everyone. Welcome to our morning market update for this beautiful Monday, February 9th. And I hope you've had a great day, great start to your week. I hope you've had a great weekend with you and your loved ones. And let's get started. Today, we got quite a bit on the docket trading wise, but not really too much news overnight, over the weekend. A surprisingly calm and quiet market, which we know that doesn't always last. It's the start of the week. It's the mark day. Monday is sets the tone for typically the rest of the week. Friday we had a really strong close. We're gonna get into all that and more, but let's kick it off today. The title is China urges banks to cut U.S. Treasuries. We're going to talk about that. Nikkei hits fresh records and what that means for the Japanese yen and futures slip. So let's kick it off with a quick little snapshot of markets. S&P's down 0.2%. Nasdaq is down about a half percentage point. Russell is also down 0.2%. We're seeing modest weakness. Tech is underperforming this morning. All right, dollar index is down quite a bit as well, almost a half percent. Japanese yen down 0.4%. US dollar, Japanese yen, the pair. But we are seeing yen strength post-election. We're going to talk about that. Yen strength isn't really good because the more the yen, the Japanese yen strengthens, the more the carry trade pressure to unwind, the higher the borrowing costs for the yen, and the more margin selling over into the US of equities for carry traders. And the carry trade finances a lot of equity positions we saw in August of 2025, contagion from the Japanese yen carrying over into the US, and it was quite a bit of downside. That's why we follow the yen. So I wouldn't say closely. It's not a pair that I look at every single day on my charts, but it is a key piece of information and data. All right. 10-year Treasury yield, it's 4.22, up 3 basis points from Friday's 419. Bitcoin down 1 percentage point to 69,000. Ethereum down 2%, and gold back up plus 1%, breaking above the 5,000 key psychological barrier. Here's the econ calendar for today and for the week. Really, we have two important updates and something that doesn't happen often. In fact, I don't think I've seen it happen ever. If that. On Wednesday, we have the non-farm payrolls. The non-farm payrolls, aka the jobs report, was supposed to come out on Friday of last week, but due to the partial government shutdown, they didn't have enough resources to gather the data. And so now that they're back to work or have been back to work, the report is coming out on Wednesday at 8:30 in the morning. Usually it's the first Friday of the month, sometimes the second Friday, very rarely, but never have I seen it on a Wednesday. So keep that in mind. Mark that on your calendar. Then we have CPI coming out on Friday morning. But in terms of today, for the rest of the week, those are the key events that the market's watching for. But in terms of today, we're very light on the economic calendar. In fact, we have Fed's Moran, who is a dove, and he speaks 4 times today: 1:30, 2:30, 3:15, and 5 p.m. Insanity. This guy is racking up the speaking fees. The theme is digital assets and Boston University appearance. So, what he says is probably going to be scripted. The Q&A could develop some news stories that are relevant to the market. But honestly, these guys are well trained in media speaking. They probably won't divulge much, but just watch out because Feds Moran is a pretty interesting character, and he could have some market moving stuff that comes out if something slips. Donald Trump is being interviewed at 3 p.m. That's going to be an important one. Anytime Donald Trump speaks, the market tends to move. There's usually some information there, and that's it. We see kind of lower conviction movement today. Not many big news drivers, so we're moving on technicals, price structure, and order flow, which is actually a great thing for day traders. Okay, major market drivers for this morning are Japan elections. We saw the Nikkei 225 hit fresh record highs, so their stock market is on fresh highs above 57,000. The Dow on Friday breached 50,000 for the first time as well. So some strength there. Some equities in the US are at all-time highs, and that's primarily driven by the Dow. Quick and fun fact, the Dow is actually a really good correlatory market for day trading. It does tend to lead some of the moves, and sometimes it doesn't. But it is worth watching in most sessions, and I have it on my top chart, the screen up there, for correlations, my correlations window. That gives us some insight. I spot check it throughout the session. Second piece of news item, and the title of today's morning market update is Sell America Theme Returns, driven by China. Bloomberg reported that China is urging their banks to reduce or to curb purchases of US Treasuries. Now, this one goes really deep, but if you don't know, a lot of the treasuries in the United States, a lot of the financing for the United States government has happened on the clock of China buying the treasuries. The way that it works is China goes and sells goods to the US, and a lot of goods, they're their biggest trading partner. So the US imports a lot of goods, China exports it. They sell the goods, the US pays for them in US dollars, China has a lot of US dollars. Well, if they go and they start selling US dollars on the open market, their Chinese yuan's going to explode higher, and it's going to make their exports less attractive, and it's going to really, really greatly diminish their export leverage. Not to the point where they have no profit, but it's definitely going to kill the profit margin significantly. So what does China do with these US dollars? Because they can't sell them on the open market against the yuan, they go and buy treasuries and they finance the US government. Now, the last 2 years, China's been doing something completely different. They've been buying a ton of gold, and I would say this extends way more than the last 2 years. They've been accumulating hordes and hordes of gold. And now, China's CCP, their Communist Party, is telling banks, urging banks to reduce their exposure to US Treasuries. All right, they're quoting amid market risk, but we know that this is kind of a situation that is gonna be a sticking point in any negotiations between the US and China, because this is an agreement not in writing, but this is what has pumped up the United States. It's supported the budget, and they're still running at a deficit. By the way, the United States. We are. I'm in the United States now, so I'm part of it. In the UK political crisis, we're seeing some political stuff there. Doesn't really impact the market. We won't go too much into it. So again, that's what we got for today's calendar. Light day before Wednesday's non-farm payrolls and jobs report and CPI Friday. Um, Other notable headlines. This one's funny. Trump predicts the Dow's going to hit 100,000 by the end of his term. It's 3 years doubling. It's not unrealistic at this pace, but it also sounds nuts, right? Dow at 100,000. Can you guys imagine that? I think it's a little bit out there of a forecast. I know analysts are bullish on it, but 100,000 is a key psychological level. Uh, it's cool to know what his kind of benchmark is, though, and something we could track with. And that's it. All right. The takeaway, the dollar's under pressure this morning. Japan elections raising risk for a Bank of Japan hike. The expectations are coming in sooner. All right. A hike of rates in Japan will have a lot of impact on the carry trade and some potential pressure in the US. So keep an eye out on that. The first hike was expected March. They're saying it could come earlier. March and April were the hikes, which means this meeting in February. All right. And then delayed data reports Wednesday and Friday. Jobs Wednesday, Friday, CPI, which is inflation. Very important reading and very market moving information. So that's your roundup for the morning. Let's turn around. Let's get on the charts. Let's get active. Let's get excited. I'm pumped up full of coffee, which is always a good sign. It's always a good sign. And let me switch my camera to the one on the Mac so you could still see me. And let's close this window. I should have just went live on the camera. I'm still figuring out the YouTube from Zoom, but next time I won't actually have the chart. There's no point of you looking at this futures disclaimer the whole time. You already know what it is. um, but in case you didn't, now you do. All right, so let me go show title bar on Sierra charts because I didn't realize I couldn't expand my. There we go. Let's take a gander at this morning's trading plan. And before we build the story for the trading plan, I'm a firm believer of building this story for the sessions. So when you're trying to make a trading plan and you're sort of just looking at a chart plopped full of data, you could do it. You're going to do it to some degree. But when you tell yourself the story of what happened the prior US day, the overnight session, and then it leads right up to today, becomes a better opportunity to set this trading plan with this fresh knowledge. So let's review the session. The story of Friday's session was the story of a bullish market running away. The open was 68.54, three quarter. That happened down here. We had some consolidation leading into the open, but we opened up slight pullback to set the prior day low at 50 quarter. So that's our PDL level. PDL, prior day low. All right. Then we get a rally straight targeting through right through our flip zone. We said, hey, I want to be short below the 90. We explode above it and we tag the 69.05. 69.05 is a key order flow level from weeks and weeks of order flow action. And then, we say we can't continue to stay short. Obviously, we've broken above our flip zone. That's the whole purpose of the flip zone. Therefore, let's look for pullbacks. We got on board some of them in the trading room, but we did have a challenge a little bit in this chop and straight upside continuation to go and put the the prior day high, the US high at 65.5. All right. Therefore, at 65.5 was the prior day high. The prior day low was 50 quarter. That's 115 and a quarter point range. That's strong gains on the market. All right, and then the market from there pulls back to close PDCC as previous day cash close. Everyone has it at 4 p.m. But pro traders and trading desks that remember the pit sessions when you could trade equities in the pits, all the pits are closed now. But the cash settlement close was 4:15 p.m. and that one still has more influence than 4 p.m. So there's a pro tip for you there. All right, prior day cash close 50 half. So we gave up some of the gains into the close, and we had 1.81 million volume on Friday session, a little bit higher than the annual average so far, but quite a bit of interest in that session on Friday. All right, that's where we're on Friday. So the story overnight, it's important to tell ourselves the next story that leads closer into our trading plan. Price overnight extended higher. All right. We see prior day cash close here. We go in and we start rallying. We took out the prior day high and we went to mark the overnight high at 79.75. All right. That's 14.5 points above the prior day high. Pretty bullish thing. But then right after we started selling off overnight and we went and we tagged the overnight low at 69.21. All right. Then we kind of rolled back and settled a little bit into the prior day cash close, which makes sense. All right. Anytime you see the market reopening after an overnight session around the prior day cash close, you expect a little bit of chop early on. All right. So this doesn't make it any different for this morning. We do expect a little chop consolidation, some sideways movement to head fake a few people before we get the move of the day. All right, that's the story overnight. We currently have 205,000 contracts. Not strong by any stretch of the imagination, but also not weak. Kind of right in there with the average open for a Monday. All right, so now the trading plan. Ladies and gentlemen, I present to you the trading plan. Prashant, William, Marco, good morning, sirs, on YouTube. Thank you for the hello. Here is the trading plan for today. Okay. It seems a trip to 70-30 could be in the deck of cards today. I know it seems high. It's about 50 points. Well, from the 36, it's 100 points away. If we do get to the 70-30, one thing to know is we've failed above 7,000. All right, 5 times. We've had 5 rallies go to above 7,000 that have failed on large proportions, multiple 100-point failures off that 7,000 break. All right. And it's since January, the beginning of the year, 2026. We got a lot of sell liquidity above as we approach 7,000. 70-30 is a big resistance as well. And a lot of that sell liquidity is kind of hampering us in from running an all-time high. We should have been at all-time highs already, right? We've made many attempts, but we just keep getting jammed up at the tops and we can't expand through the all-time high. So 69.21 today becomes the flip zone. Basically, the flip zone means long above, short below. Or let me say it a different way, look for long opportunities above, look for short opportunities below. Pullback longs are at 69.45. This one's kind of already broken through. We didn't even open. I like to look at these pullbacks with the open. All right, the other pullbacks will be around the 69.35, which is right here, right now. And 69.20 to 25 obviously is the last one because that's our flip zone. for a pullback. We should hold this low from the overnight session, but if we do break below, we could be headed lower. And I think '05 is the first target to the downside, and then the 90s. So theoretically, the trading plan is this: try to anchor and get along on some order flow confirmation, and hold the price structure bullish, or fail. That's fine with me. I also like a failure. Come back up and try to sell it into the overnight low, resistance to extend it down to the '05. If we get a 16-point move for today and we catch it nice, that's enough. If we get the down to the 90, then that becomes a 30-point move. Obviously, that's better than 16. Um, Below the flip zone, I don't want to be. I don't. Okay, why do we have the flip zone so close up here? Well, I don't really want to be short above any of these levels. I know it looks like the trend is breaking down, but you have to know, and this is going to be part of the first lessons that I teach in our live order flow course on Tuesday, the context of how the sessions roll through and how they transition from one market to another, because this is one of the things that many traders don't realize. There is rhythm and there is rhyme in the way that it works, but many people define a session as the US session, the overnight session, RTH and ETH. That's great. It's very simple. There's actually sessions built into a session, and there's in fact three sessions that are super important. But what you need to know right now is a pullback on the overnight is right on par after a long extension up on Friday. It's actually a bullish thing. So we want to be bullish here. Um, I don't really want to have a short bias off the open with bullish structure. I want to be convinced of the short. If I am going to get short, the convincing will happen if the flip zone breaks, right? I always like look when I left trading a couple of years ago, I loved fading, but now that I'm back fully, and I've been back since like August of last year, by the way, and I have kids, and I feel like I'm at this place of life. I want stress-free trading, and the way to get it stress-free is to trend trade. You're gonna miss some of the best trades, all right, and you're gonna get some of the best trades. But the thing with fading, and what I mean by fading is the market is strong and you're looking for a sell. The market is weak, you're looking for a buy. The thing with the fade trades is that if you can get on the trend, right? If you can get long when it's going up, if you can get short when it's going down, if you can get short when it's going up, and you can get long when it's going down, you can just do anything you want, can't you? And I know it's empowering to do anything that you want, but if you can do anything you want at any single given time, then I would argue it becomes much harder to wait for the next best trade, because any trade could be the next best trade. This is why I've implemented a strict rule of getting long on pullbacks above my flip zone, getting short on rallies below my flip zone, and not trying to fade the extreme levels, leaving that for younger, more younger traders, put it that way. All right. Because I'll tell you this saying: there's old traders and there are bold traders, but there are no old and bold traders. All right. So bold is not the move I want to make. I don't want to trade my ego. I want to trade the chart. So that's the plan. All right. And as I'm talking, this thing is selling. Like, look, we might only have one opportunity to get long on a pullback if it doesn't break the overnight low. If it does, then great. The price is flipped below our zone. We're flipping to the short. All right. And we're trading on the side of the trend always, just because we want a nice, simple, easy life. Uh, the VP on the right side, how many days? It's a composite, I think, with great question. I think it's just prior day or current session, because you don't really see much of it. It would help if I actually made it longer, to be honest with you. I like volume profile stuff. This should probably be at least 7 days. So you can have a nice comparison of the right volume profile to the current session. The last 5 trading days would be ideal. All right. But yeah, it looks like it's just the current session because there's only volume on the overnight low. And I think the way it's configured is overnight plus the day. To be 100% honest with you, I don't pay attention to it much. You could tell. I have a volume profile chart on the very left. You want me to show it to you? I can show it to you since you asked the question. It's part of my chart book, and it's this small, literally. I do expand it at times when I'm curious, but this is a weekly volume profile chart, and this is all that I need in terms of volume profile, showing me the big levels. I'm not a huge volume profile trader because I don't know. I believe when you start looking at volume profile, the last day and a half or so makes sense. Longer than that, those positions have likely traded through. So I'd rather rely on order flow for the current auction. But yeah, to answer your question, do you suggest 22 days and 10 days? I don't know. Does it work? Like at the end of the day, changing the composite profile doesn't change much. And it's very helpful longer back in a range, but when you start trending and above all-time highs, it doesn't give you too much info, does it? It just gives you the most recent data. So I would recommend the one that works. 22 days makes sense because that's a trading month, and 10 days is 2 trading weeks. So you're in the right headspace for futures. Remember that Sunday also counts as a day. So you literally have 6 trading days a week. So based on that, I'd go 24 and 12 to try it out if there's a light adjustment for you. Just my feedback. Love you guys on YouTube. Let's get in the trading room. We're going to start looking at some deeper order flow, some gamma stuff, and the MBO report for today's session. And let's get ready. We in this together. Email TradePro about getting in special training the other night. Never heard of it. Okay, well, we in this together. That's not good. That's not what we're aiming for. We had a really successful launch. I thank you guys for trusting us as your trading partner. Um, we are going to start doing the live trading course on Tuesday. So this is like a course that feels like a coaching program for the price of half of a course because it's a monthly subscription model. You get everything included for one low ticket. And we're starting the live course on Tuesday at 4 p.m. And we're going to be doing 2 to 3 lessons a week until we finish. And I'm 5 lessons into it, the development of it. And oh my gosh, I'm surprising myself on how great it is. But we in this together. I'll tell you what, since nobody replied, um, email Donna at the company name.com and tell her to put you on and give you the opportunity to get in today, and I'll approve it. All right. Okay, if it's working quite well, Dobrin, don't change it, bro. Stick with what's working because at the end of the day, whatever works, you don't want to tweak that. Last question. Are you friends with me on Discord? I seem to be talking to you, but not sure it's you. Bro, people go in the Discord channel and duplicate my name and spam people, trying to get them to buy Telegram chats and stuff. That's why I really dislike Discord because I don't want that experience for you. So it's probably not me. Look at my profile. I have the admin badge and I also have will not DM you on my profile. So if that's the profile, then that's me on Discord. Love you, bro. Message me there. We'll chat and let's get down to business. Trade pros in the room. Hang tight. I'm going to just shut down the broadcast and we're going to get going with our trading room for the day. Thank you guys for tuning in on YouTube. You have yourself a fantastic day. And of course, I love you all.